Hello, traders. Sorry about the delayed start. I had to feed the hamster that runs the wheel that runs my internet, I guess. Apologies for that. It's 8:03 a.m. Chicago time on the 15th of July, 2020. It's a Wednesday, hump day, tax day, tax day. Get those taxes in. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1797 at this rate. It looks like Monday is the 1800th episode of this. Been doing this for 6, 7 years, live streaming. Been doing it a while. Anyway, this morning we are looking at a market that has popped higher, risk on. Yet again, we are pressing forward with higher prices, moving away from where we were after the drop yesterday. Took back, at least in the U.S. indices, took back a lot of the sell-off of Monday. Remember, Monday, as I mentioned yesterday, Monday was driven by news, and we have to be very cautious around news-driven events that we are likely to come back to the scene of the crime, and bada bing, bada boom, overnight we got back to the scene of the crime, which was around 3220, where we took a drop, and pushed lower. So this morning, the Russell leading the pack. The Russell up 3.28%, up 46 and a half points, trading at 1465.90. This Russell, you can't keep a good Russell down. The Euro Stoxx 50 up 2.21%. The Dow up 1.94%, or 515 points in the futures. The DAX is up 1.89%, up 240 points. And the S&P up 43 points, 1.37%. Big releases there. We do have earnings. And we have some key ones that came out this morning. PNC Bank, Goldman Sachs, among others. The EPS for Goldman Sachs came in $6.26 versus $3.78. Expected a surprise beat by 65%. We got PNC Bank and Bank of New York, Mellon, and others that released today, mostly in the financials, and the markets just popped higher. So that's where we stand today. PNC taking a huge beating, came out with earnings of $1.90 loss versus 51 cents gain expected. So a surprise of 472% to the downside. Anyway, so that's a lot there to digest. I'm sure we're going to continue to get earnings, as it is earnings season for the reporting on the second quarter. And so that's where we stand. Equities are definitely on the move, and the bonds are down a whole handle. The bond futures are down one handle, one tick, quite a bit. The U.S. dollar is back down to $95.80, 80 and a half cents. Gold is walking its way back towards 1800, trading at 1809.40, kind of holding steady. And then the 10-year is off 8 ticks. The Bund is down 22 ticks. Crude up 6 cents, trading at 40.35 versus yesterday's settlement. So that's where we stand today. Looking at the calendar, we had several key releases this morning. There are many actually out of Europe, the inflation rate out of Great Britain, and so on. I won't get into these. You just need to go find a calendar and look. What's expected in about 7 minutes, we get industrial production. It's not expected to be a big move. We're expecting 4% month on month and a drop of 6.2% year on year. Bank of Canada rate decision at 9 Central, 10 Eastern, and then crude oil inventories at 10:30 Eastern. Fed's Harker 12, and Australian employment numbers at 9:30 p.m. Eastern, and China's GDP, which will be a mover for the Asian markets. China's GDP growth expected at plus 2.4%. The prior is negative 6.8. And that's where we stand in terms of releases. So let's move on to what was expected yesterday versus what we actually got. Now, my charts are going to look a little confusing because I'm in the process of retooling and cleaning up and adjusting. The primary scenario yesterday, the expectation was for a push lower into 31.16, and then a push back into the range targeting 31.48. That's pretty much the expected range for a rally. The secondary is a push up into 31.48.75, and then a drop to 31.02 for a bounce on the close. This is scenario 2 right here. So responsive buying, impulse down, consolidate for a bit, and then drop down into the 31 area before the bounce. Let's take a look at what actually happened yesterday. So here's what's different about this chart. If it would update. What's different is that I am monitoring the day and the Globex session. I have separate profiles for these. So I'm looking at the full session. This is the Globex session, and the short session is the day session. You can see it says U.S. Open, U.S. Close down here. These two vertical lines. What's in between them is the day session, and then what's outside of that is the Globex session. And if I zoom in to what happened yesterday, let's back up a little bit. Well, actually, let's just go to the trigger chart. Trigger chart does not have the full session, so it may be a little easier to digest. Okay. So here's what happened yesterday. We opened right in here. We opened at the 31.75, tested down and became responsive. We pushed to 52. Remember, we're expecting it to push to 48 or so. Pushed to 52, closed touched the closing price, and then dropped quickly into 31.19. The expectation is a pullback and then a continuation down into the 31.05 and 31.02, and it just did not have it in it. Okay, it wasn't able to do that. It consolidated for a fair amount of time in this lower end of the range before we had this impulse up. And then from there, it was range extension to the upside. And it was a rally market with one clean. I wish I had time to show you this in the on the volume scope. Pretty clean setup here. We don't get setups this clean as we did here at 31.44. And there were several tests of the prior low here against the VWAP in the mid, and it just kept pushing higher and higher and higher, and went all the way up to 31.92, representing this low volume node from Monday. This is kind of the breakout point lower into the closing trade in the afternoon of Monday. If you recall, we pushed and closed this gap. There was a single print down here. We closed and pushed through it. So overall, we did not hit any of the scenarios except maybe for scenario 3. But scenario 3 was expecting a drop test down and then a push up, and it did consolidate in the areas that were expected. But we ended up pushing all the way up here, all the way up there. Just did not foresee that it would be this strong a push higher. Now we could see from the open that it could go both ways. There was a lot of cross current in yesterday's trade, very tough to read which side to buy and hold on to. Look, it's one, well, let me state it this way. We can always scalp, right? There are many people who are online and teach and so on, and God bless them, whatever. And they're just, they're just looking to take this to this or fade a high from here to here. The goal is we want to get paid for the risk. We want to get paid for our full risk. This is a tricky thing to do, to get into, for example, the NQ or the ES and to talk it up and not talk about what the overall picture is and what the market is doing or where it's trading. The fact that it was trading around this high volume node, and so we expect noise coming in. We expect to keep our hands off, and we expect the market to tell us which side is likely to be a winner before we jump in. And when we jump in, we need to get multiple times our risk, meaning our R factor or risk factor needs to be multiplied, at least 1.5, 2, 3 times of, if not more. The volatility is quite high. I mean, the VIX is around 30. Volatility is quite high, and close to close, the S&P is moving about 38 to 39 points, close to close over the last 20 days using historical volatility. So there's plenty to work with here, especially for a summer trade. But overall, we want to understand that if it rejects a certain area, we need to hang tight. In my opinion, we need to hang tight in there and follow the plan. And this is intended to be the plan. We're expecting certain behaviors. These lines are not drawn here randomly. They're not wishful thinking. They're based on daily range statistics, close to close statistics, and behavior following the market auction and market auction theory using volume profiling and price action. And so also you'll notice that the levels here, the stock zones that I have drawn here, they have gone down a lot in the new stock zones that Convergent members get. You can see there's a lot less here, but overall, what it did yesterday is it wasn't able to get. Remember that the 3120. We've talked about this quite a bit. 3120, 3020, 3220. That 20 level. Don't ask me why. No idea. But that 20 level has been a quite a responsive level, and I'm only talking about what I see. This is what I see, not what I'm making up. And yesterday bounced off of the 3119, and now we push all the way up to where the 3216, 100 points from here to here, and we are around that 20 level again. We're sitting here around the 20 level again. We're trading 32.27, and we are back in that region. Okay, so we've moved away from the accepted value area of 31.35. We've moved up into and through the 31.89. If you recall, there's an MC point of control here, and we are testing above there, which brings us into looking. And by the way, the delta was with this move this morning, and it was with this move yesterday, although the delta yesterday was weaker than the price action. If you note, once the market pushed up, so here's the market pushing higher, coming back through the open. This is the open, the green dotted line. That represents a zero line on the delta. While the market was above the mid here and chopping higher, the delta remained negative. So what we saw on the order book, we saw a lot of sell icebergs, a lot of trades hitting the bid on every push up, heavy volume hitting the bid on the push up, and causing this delta to stay suppressed. It seemed like as we were pushing up, either people were taking profit or initiating a short position. Don't know which, don't care. The fact is they saw an incentive to sell, and the delta remained negative until the close where it popped higher. This delta yesterday was expected to push and stay above the zero line, and it just seemed like it was kind of extended. It was behaving like it was extended, or it didn't actually trust that the market is likely to take back Monday's action. I mean, we crossed all the way through the overnight range. We tested the overnight low and the overnight high, and we pushed back. And so, uh, and so here we are. We reopened yesterday at the 3:30, which is 4:30 Eastern, and then we gapped up. We gapped up at 4 o'clock, and held steady through the European session, through the Asian session, until the Europeans came in. The Europeans sold it a little bit, sold it back to the century figure. One of the things I need to adjust is my session. I need to go and get in alignment with the exchange session that starts at 5 p.m. my time and continues to 4 p.m. Of the same day. In any case, here's overall we have a market that has held a nice channel down and has broken very clearly and very cleanly this morning. Okay, and that came at about the Goldman Sachs announcement and so on. And we have a double distribution profile. We have good volume, 384,000, and we are holding the upper end of the range. To me, this looks like it is likely to continue higher and push that overnight high, 32, 33 and a quarter. Okay, so that's the lay of the land. That's what we've done. We've got another gap to deal with today, and we'll see if it's responsive. If it's not, remember Monday was a gap. If it's not responsive, if it's not pushing down and suppressing buyers, we need to pay close attention to how the volume scope acts, or the order flow acts. Whatever you use, doesn't really matter what you use. Here's my other screen. As the market's pushing down, we want to see if it starts to form these profiles or these footprints with a lot of volume near the low, meaning the sellers are being suppressed and buyers are continuously supporting price. And then we would look for the reversal bar, take the long, and start working our way to the overnight high and the levels above. Okay, so that's that's a lot to digest. I know I'm sharing a lot here, but you know you should be up to speed. Let's take a look at Bookmap, ctbookmap.pro. Bookmap showing that it is pushing into solid offerings at the top. I mean, above us we have pretty good offers at the 32.30. We opened up and what's going on here? We opened up, and as I said before, we've tested this high here, the 32.15 or so, and then have been in this downward channel until we set up a nice little zipper base here and started to reverse, and we've pushed and collided into the 32.30, and we have offers between 33 and 35, and that's kind of closed the buying, shut off the buying for now. We have bids down at 31.95 and 31.85.83. That's what the standing order flow looks like. Okay, and as we push higher, we have offers at 32.40, 32.42, and then from there 32.50, the mid-century, and you know what? We're getting pretty close to the all-time high here. With that thought, I wanted to share something with you. This is something from a while ago. I that had been put together. It says self-management. This is a really important thing to practice and remember. Self-management, right? Discipline and so forth. I believe I have the ability to be a successful trader. I also know that my mindset's not always constructive, which disallows optimal decision making when trading, which is very true. The chimp mind, the lizard brain, whatever. I need to separate my negative beliefs about the economy, society, or whatever from trading. Very, very important. Very important. I'm not an economist. I'm not a sociologist. I'm a trader. I need to act like a trader and do everything in my power to avoid negative thinking during market hours. Such a mindset makes it almost impossible to objectively see what is happening during any given day. Okay, so this was written by a trader back in 2011, and this advice holds true and will forever hold true for traders. Be mindful of how you're thinking and what you're thinking as you are trading. Very, very important words there, coming from probably a lot of pain and a lot of experience, but be mindful of how you're thinking of things in terms of what the economy is and what this guy's doing, or what that other person is doing, or what she's doing. Doesn't matter. The fact is, you're a trader. Your obligation is to trade the market that's in front of you. Let's take a look at what's expected for today. So we are holding this upper distribution in the overnight session. We have a low volume node or zone, and then we have a point of control beneath us. The expectation this morning, the primary expectation is an open auction that attempts to push higher. As folks come in, I'm looking for this to turn around and fill a portion of this gap, potentially down to 32.10. I believe there will likely be a fight here at 15 or so, 32.15 or so. We're getting some liquidity in that area. And then I expect the market to push back up and start to grind its way into this old gap zone, very old gap zone from the COVID sell-off. Look at the date on this. The 24th of February, we had this gap. That is scenario one. It's quite amazing that we're back up here. So that's the primary scenario. The reason I expect it to pull back is because it is somewhat extended given the action from yesterday and given the action from the day before it. The market appears to be somewhat extended, and the delta is showing us that a little bit. The secondary scenario is an open that drops quickly into 32.15, 16 into the stock zone right here, consolidates, and then we get an impulse up, and then we take out the high. And in this kind of scenario, we are likely to continue to drift higher and push into these stock zone areas and kind of consolidate in those areas. Okay. The third scenario, this is a gap. The third scenario is an open push up, test, drive down, consolidate at 32.10, and then start to work itself back towards the prior day's range, which is 31.92 right here. Dip into the prior range and then come back for a break. This sets us up actually. This sets us up actually around the century figure, and it gives us an opportunity. Remember, we pushed 100 points yesterday. We pushed 100 points. Now, very it's very rare that the market can hold on to that much push without a pullback. So I expect it to come back to the century figure, test it from above the 3200, test it from above. Each one of these scenarios has an equal probability of playing out, although I think that it's likely to push the high and pull back early on. Okay, I'll leave you with those thoughts. Sorry about this being as long as it has been, but there was a lot to share. Good luck today. I'll catch you tomorrow. And if you have not checked out EdgeClear, please take a moment to check out EdgeClear and join us. I would appreciate your support. I believe you'll get the best service possible for any brokerage service that's out there. Check out EdgeClear and maybe start your own Edge pool with 5 or more participants. If you have 5 friends that trade together, get a hold of us. We'll start a pool and set up a prop pricing model for your fees. Good luck.